very good evening to you, esteemed viewer. Thank you so much for watching Church of Uganda Family TV. We believe that the fact that you can listen to this voice, you can see this image, then God has given you an opportunity to see the beauty of today. And of course, that's the reason you are alive, and we do not take that for granted. All we can say is thank you, Lord, for today. Today is a Wednesday, and of course, here on the Family Hour menu every Wednesday, we are looking at finances, and of course today we are looking at something very, very important. Of course, we know that we are almost we are almost getting into the middle of this month. However, towards the end of June, as per URA, people should have filed their returns, and of course now this entails what we call tax compliance, and that is what we want to look at to know why we should be compliant and what happens if you are non-compliant. Of course, that and more is what we are going to look at today in today's edition of Family Hour. Edrine Mukalazi is my name, and with us is a guest who is a tax and accounting specialist. He's none other than Mr. Mutatinensi Dedan. It's a pleasure having you once again.
Thank you. I'm happy to be back.
Sure, it's been a while.
Yeah.
How have you been?
Yeah, I'm okay. We are serving the nation. We are really trying to make sure that people comply and pay their taxes in time.
That is interesting. I kindly greet our viewers. They missed you, I believe.
Sure. Good evening, our viewers. I'm happy to be back this evening. I hope you will enjoy this session.
Okay, looking at tax compliance, and what is tax compliance as a broader term? Because we talk about it in our conversations, tax compliance. URA issues out adverts about tax compliance, but I mean, what is tax compliance?
Thank you, Mr. Mukalazi, for that good question. Interestingly, I come at a point when tax compliance has become tax compliance, and I think indeed it is important for us this evening to come together and appreciate and understand what it's all about. Now, tax compliance is about abiding by the tax laws and tax regulations in simple terms. That as a taxable person, me and you, a company out there, that are we doing what we are meant to do at the right time? Very key, at the right time. Because when we talk about compliance with the laws or abiding by the tax laws and tax regulations, we are looking at if you are required to register for a certain tax. Say you are meant to register for value-added tax as one of the tax heads that we have. Have you indeed registered on time? If you have staff, you are meant to register pay as you earn. Have you registered on time? If you are into manufacturing and you are meant to register for say excise duty as another tax head, have you registered on time? Now, after registering, of course, now you have started the journey. So registration is the first step into compliance. So if you have registered, then what's there? Because as we shall see, tax compliance is about fulfilling your obligations as a taxable person or as a taxpayer. Now, after you have registered, now the journey has begun. You need to look at when are you meant to file your returns.
Okay. Before we get into that, let us first of all talk about this registration. Is there a specific period at which someone is supposed to register?
Wonderful. Importantly, that today, as long as you think of getting a tax identification number, which we call in simple terms a TIN, and of course in the current amendments, now every other person who is having a NIN will be the tax identification number. That's a new development from July onwards. So what am I saying? That as long as you are getting this TIN, the first tax head you register for is income tax. Because just look at it in this perspective, that a TIN is a tax identification number. So if you are outside the tax bracket, you don't need a TIN. For what purpose? It is a number, a unique number that identifies taxpayers. So me and you, in case we are not part of this category, we don't need a TIN. So immediately, the moment you think of getting a TIN number, the first tax head you are registered for is income tax. Now we get into the other tax heads. That if you were in a serious business and you make turnover or sales, you sell things that are worth 150 million and above in 12 months, then the law requires you to register for value added tax. That's one way. The other way is that even when you have not made these sales, you may, for example, you have received an LPO, you have a contract, you are going to make 500 million in just like 3 months. Then the law again says, register before you even transact. Because here you are sure that your sales will be above, we call it a threshold. And a threshold in quarterly terms, we look at 3 months. In 3 months, how much are your sales? Are you beyond? See, when you look at 150 million and put it in quarterly terms, you divide it by 4, it gives you 37.5. So in your business, me and you owe a company, are you able to make sales of 37.4 million in 3 consecutive months? I want to explain that so that our people can understand. When you are talking about 3 consecutive months, we are looking at, for example, Jan, Feb, and March. Those months follow one another. That's what the taxman is looking at. That in 3 months that follow one another, have you made sales that are beyond 37.5?
So in other words, every month 37, or for the 3 months?
For 37? The 3 months cumulatively.
Okay.
Yes. That if I can make 1 million in January, I make 5 million in Feb. Now that is 6 million.
Yes.
And I make 35 million in March. My turnover or my sales value is above 37.5. So the law requires me that as long as I have surpassed the 37.5 million mark, then a month that follows, I'm required to register within 20 days. So it is not optional that I will wait and see. No, as long as
when the taxman comes.
Yes, as long as we have surpassed this level, then you are required by the law to actually register. Now, what happens, you can be trading and you are not minding, but when the taxman comes and they are saying, why are you not registering? You say, maybe I'm not yet ready. For them, they will check your sales. And they have a number of ways they can actually check your sales. Either they can look through your records if you have them, or quite often, if you deal with third parties, let's say you supply KCCA, you supply these other entities, for them, when they are paying you, they charge you what we call withholding tax, the tax deducted at source. So the moment they have withheld this tax, they remit it to URA. So URA is able to tell that Mr. Mukalazi has actually made sales of 100 million in 3 months. But for you, in your wisdom, you feel, URA cannot tell. I don't even have records. If I don't have records, how will they ever know? But again, remember, if you are in serious business, these entities, like the KCC I mentioned and the others, they pay through the bank. So now, the moment they are paying through the bank, it is what we call third-party information. That URA can use the bank. If they say, bring your bank statement, then automatically they will get to know that your trade or your business has much more than the 37.5 in 3 months. Or, if they check, remember when an entity has withheld some tax off you, there is no any other point where this tax will go other than URA through a return. So URA already has, Mr. Mukalazi has already reported that I paid Dedan. So if I pay Dedan, and Dedan is not declaring the same income from his side, then that's where the taxman comes in. You are in December, they are saying, no, you were meant to register for VAT in January. We call it, they backdate the registration. That for all this time, the sales that you have made, the taxman is waiting for VAT for you even when you didn't charge it. Because you failed on your first obligation. So, as we practice, quite often you meet people and they are saying, but for me, I don't need VAT. No, it's not optional. This is a legal obligation for people within this country, within this economy, that as long as you are above this mark that I have mentioned, either the 37.5 in 3 consecutive months or the 150 million in 12 months, then you are mandated to register for this tax. It's not optional.
Okay.
Then, of course, if we get into, if you have staff, and today, when we talk about staff, I would want also to make that clear. Even you, the business owner, the director, remember, we have a difference between shareholders and directors.
Yes.
Shareholders are people who wake up and say, start business. We can be 10, but it's not all of us, the 10, who will get into the day-to-day running of the business. So what happens, we shall appoint a director. So the person that we have appointed as a director is actually an employee. When we look at Section 19 of the Income Tax Act, directorship is a source of employment. When they are defining, when the tax law is defining what employment is, even a directorship, you being a director in your company, it is actually a source of employment. You are earning by you running this. You are not earning through a dividend, because a dividend as a shareholder can only earn through a dividend. That yes, I've invested so much, we have made this profit, we have paid the taxes. Remember, a dividend is also, by the time you are paid a dividend, the taxman has already taken the corporation tax or the income tax on the business side. Now, you are saying that me have made profits of 100 million, but I feel I need to take 20 for my personal use because it's me who put capital. The taxman is again waiting. That before you take the 20 million, your company should first charge you 15% withholding tax. You want us to understand this because quite often we take them lightly.
Exactly. And I think that is something that skips people's minds. Exactly. Like, I'm not inclusive, I'll pay for all the other.
Exactly. Because just look at it from this angle. You have made profits as a company. The only way you can take out money is not just you waking up and going to the bank and say, give me my money. No. Remember, there is a difference between the shareholders and the company itself. In the law, we say that a company is an artificial person. You and the company are not one thing. A company is an artificial person somewhere, then you, the business owner, you are also there as an individual. The other one is a company, for you, an individual. So, by you investing in this company, if you want to get money out of the company, you qualify for what you call a dividend, as long as the business is making profits. So, if you are taking a dividend, be rest assured that the law requires you, now the company, to charge you 15% of the 20 million, the example I gave.
Yes.
That you don't just go say, we have made profits of 100 and I'm taking 20, that you just take. No. You can take it today. 2 years later, when the taxman comes, maybe doing an audit or a verification, I say, no, but this, I don't see where this 20 million went. You are like, this 20 million, I took it. There and then, there is even a fine, a penalty, for you didn't do what you were meant to do.
It's that serious?
Yes. That you don't just wake up and do things the way you want. Because we are in a country that has rules and regulations, has laws that actually govern us. Whether you are in business, whether you are where you have seen the express penalties that are on the road. Why they are doing this is to try to direct behavior. Yes. Now even the taxman comes in that way. That you don't just do things the way you want. You do as per the law. Remember, these laws are not made by URA. Quite often we say URA. No. URA is a tax collector. They receive the laws from the Parliament of Uganda. Their mandate is to collect taxes. So for them, they are implementers of the law as far as tax law is concerned. Now, so there are several other tax heads. Say stamp duty. I've talked about excise duty. Excise duty is mainly for those who are in manufacturing. So, as long as you are meant to register, you register at different intervals. That's the first thing.
Yes.
The one that is default, the tax that is default is income tax. That irrespective of the business that you are in, here when we are talking about tax, the focus is business community, that irrespective of the business that you are handling, whether you are downtown, whether you are uptown, as long as you are in a business, you must register for income tax. Remember, a few years ago, URA and other bodies, KCCA, URSB, they created what we call a one-stop center. Now, this one-stop center was again intended to help people get into the tax bracket, but also comply. How does it work? That today in Uganda, you cannot get a trading license when you don't have a TIN number.
Yeah.
That is already, it's no longer a choice. Think of a trading license, they will ask you, do you have a TIN number? Because KCCA used it to enforce and move to every other shop, which URA could not do then. But by creating a one-stop center, they have made it in a way that KCCA sit here, URA sit here, URSB sit here. Then in the local governments, even the local government officials are also there. How do they work? When you say, I need a trading license, the question is, give us your TIN number. I don't have a TIN number. Go to URA and they help you. So they send you to, in the same office, the way we are here.
Yes.
So you go to a URA person. A URA person will not register you when you are not registered by URSB. So when you talk of a TIN number, they ask you, are you in business? Is your business registered? So they need your business registration certificate for them to process a TIN number. So by you getting a trading license, you have complied with three things. One, you are now legally registered as a business person.
Yeah.
So when we are looking at statistics of those who have businesses, you are one of them. By you being one of them, it means now you are a taxpayer. Actually, quite often, when they are registering you first time, before you get your first trading license, they first say, okay, pay your provisional taxes. You have started the journey, so make a contribution to your government. And that's where now we start. That way, it has been put forward to help especially the informal people. Those who understand, they know at this point I will register, at this point I will register. If I want to start a company today, I know how I will register with URSB. They have put everything online. I can handle this without even going through others. But now, my brothers and sisters downtown who possibly don't have the knowledge and the information that me and you have, usually struggle on how to register and handle the URSB registration, TIN number registration, and then getting the license. But now, the one-stop center, and in the town here, it is just here at DTB. Yeah. There was another office downtown, I don't think, Sekaziga House. I'm not sure if it is still there. This was a move intended to check the informality in our economy. That many people want to trade, you find someone is a millionaire, but it's nowhere in the statistics of the country. But now, we are sure that KCCA will push you. The moment they push you, the taxman is also waiting. And that is actually what is happening today. So it is no longer optional. We have reached at a level as a country that even those who are still hiding, it is just a matter of time. What am I saying? That tax compliance is something that is unavoidable. I really encourage every other person to get interest, to pick interest in this kind of a discussion. If I'm in a business, what are my roles? What do I need to do? Because the taxman is waiting. And as I have already stated, accounting and taxation and audit, they are historical in nature. What you are doing today, you may enjoy and actually think that no one will ever ask you. 3 years later, the taxman is saying we are coming for an audit. They are asking you things of 3 years ago, possibly where you didn't make any record. You even got the command and enjoyed, but now they are saying we have an assessment of 50 million. Then now you struggle. And the other important bit when we talk about compliance, you cannot talk about compliance and forget bookkeeping. It's like a sister and a brother. Compliance is about abiding. You abide. You make sure you respect the rules, tax regulations, tax laws. But you cannot plan and look at tax as you are meant to do when you don't have records. record keeping is the foundation of tax compliance. Because you are telling a taxman that, look here, my sales are 100 million. Go through my receipt book. If you find more than that, then ask me. Someone has approved that. Indeed, you traded 100 million. Then you are good to go. These are my expenses. Someone verifies. This is my tax. I have paid. Good to go. But quite often, we feel we can actually sit and cook figures and the taxman allows. We have reached at a level where URA is actually using, they are doing data mining very well. I give them that credit. They are using data to actually follow up on people who are not compliant. So it is no longer an issue of, we have seen even in the practice, someone calls you, may I want to pay a tax of 2 million? You're like, okay, you want to pay a tax of 2 million. What's the basis? Because the only basis is, do you have records? As I had discussed here last time, if we have someone, for example, in a business and is earning below 10 million, this person does not pay a tax. If you can indeed prove. But the people that we have downtown, actually, you cannot tell if indeed this person is below 10 million or if this person has actually been hiding. And now that's where the taxman comes. The taxman does not believe in anyone. Our talk does not help the taxman. What helps the taxman to assess if you are indeed meant to pay or not to pay is records. So, as I talk about tax compliance, just know, pick it from me, that bookkeeping comes in before you even look at tax compliance.
So the moment you open, then bookkeeping should be
automatically. Even before you open, look at it from this angle.
Okay.
If you say, I'm registering a company, a lawyer is charging me 1 million, already that is an expense on the business. But where is it recorded? As you pay the lawyer to do registration, has he given you a receipt, for example? Because that's the only way you tell the taxman that, no, you see, I have what we call startup costs. When I was starting this business, I had to register my company. So at the point of registering my company, I paid $1 million. You know, I paid all of this. I bought. If you say I bought furniture, what shows that you bought furniture? If you are saying I'm renting at church house, are they giving you receipts? Do you have a tenancy agreement? What shows that actually every other time you are paying as a business? So that, you know, again, we have what we call allowable deductions. These are expenses that a taxman will agree with, that indeed they are business expenses. It is only possible for a taxman to allow these expenses when they are supported. Not just explaining. See, you say I paid rent. You say I paid. No. In today's world in Uganda, for example, you cannot claim an expense called rent when you don't have a landlord's tin. I want our people again to pick this because it is very key.
Yes.
That irrespective of where you are renting, if you say you are paying rent, because you're saying in your return, there is an expense you want to put in called rent, the taxman just after will ask you TIN number for the landlord, then the location for the building. They want to know also follow up, is your landlord also compliant? Yes, because, you know, we say that one is the income, your income is another person's expense. So as I pay the landlord, to me is an expense. So before I claim this expense, I must support it so that you or I can also follow up with the landlord to look for rental tax.
Wow. So let's take a short commercial break. When we return, so we know it is that serious. And so when it gets to compliance, we need to be compliant. Otherwise, you never know when that day will come. We are taking a short break. We are coming back shortly. welcome back from that commercial break. This is Family Hour, and we are looking at tax compliance. Before the break, there are a lot of new things that came through, especially about bookkeeping. And you were telling us that when the taxman comes, the only evidence you have should be what you have recorded, including receipts. And there are instances where, for example, I declare that this is what I pay in my books, but then the receipt is a reflection of something else. So what happens in such an situation?
That is common, but it is only common, again, in the informal places like downtown. But again, with the coming of IFRS, that issue is being sorted. What am I saying? That one, if I'm paying you $1 million, it's my expense. So I need to claim an expense of 1 million. There is no reason I can allow you to give me a receipt of 200. Because by you doing that, you have cheated me. You are playing your side to minimize, but then you are putting me at a very big risk. That if I put an expense of 1 million, the taxman will say, no, your receipt is talking about 200. But now with IFRS has come to sort out some of these issues that I've bought, give me my receipt there and then. So you have no luxury of going back to edit my receipt. Because by the time you click issue, I will receive it on my mail, so you will not record it. That's one of the things that IFRS has at least helped out. But also we need to keep educating our people that your expense, it can only benefit you through a deduction in the return. That this is my expense, so it should reduce my tax liability. For that matter, people must appreciate and ask for their receipts there and then. It is total cheating. It is complete cheating to find that someone who pays, say, rent of 5 million is being given a receipt of 1 million. It is more fraud. Yeah, so let's fight for our rights.
Okay.
Yes, because it is not an issue of I'm selling you, so I will determine, no. How much are you selling? How much is the price? 1 million. Have I paid 1 million? Yes. So give me my receipt. Because I know 2 years, 3 years down the road when the taxman comes, he will ask for the same. So I cannot take a risk. So that's why we need people like you keep educating our people down there. They should fight for their rights, because when the taxman has come, you can never enjoy it.
Okay.
That discussion, it would rather be between me and the taxman, but not between our people downtown and the taxman. Because even the language alone scares.
Exactly.
Yes. These people are talking of jargons, they are quoting the laws here and there, and it becomes hard. Now that's how people like us as tax experts come in. That if you have issues, then instead of being intimidated by just the jargons, just say, oh, I have these issues. I even don't know what they are talking about. Go and represent, and we handle this. Yes.
So we talked about the process of compliance. We talked about registration, and then you are getting into filing returns, and that is where we got into this other. But I want us to complete this process, and then we see what happens if you are non-compliant.
Before we get even into the detail, the process is like this. You have registered. The obligation is that now we have to communicate to the authority through a return. A return is nothing other than a form of communication between the taxpayer and the government through the revenue authority. That's a return. So it shouldn't really scare us. So as long as you are registered, then you are meant to keep communicating. This is my position. This is my position through a return. So as long as you have fulfilled the communication bit, which is the filing of returns, then there is what we call the liabilities that come in when you file. You are saying, my tax liability is 2 million. In the laws of Uganda today, file and pay. Don't file and wait. We call it the due date for payments. That the due date for filing a return is the due date for making the payments. I need to summarize these dates.
Yes.
That, for example, for people who are following the normal financial year, that is now a period running from July to June. That's the normal government year. So those people, it means their end of the accounting period is June 30th. If you are a company, you file 2 provisional returns. Now, provisional returns, these are just only estimates. You are saying, I've started my year. So you have from July 1st up to 31st December to file your first provisional return, your first estimate. You are telling the government that, I expect to make profits of 2 million. Then the system says, 2 million. Okay, pay 600. As I said, file and pay. That is very key. Don't say you'll file today and pay after 2 months. The moment you get into that, then every other month, then interests are being computed. So the due date is file and pay. Now, the same people, if you have filed the first one by 31st December, then you have 30th June, upon which you should file a second one for a company. Now, if you can, between July and June, you can actually change or amend. In tax language, you call it amending. You can amend this return as many times as possible, because this is an estimate. So they allow you to keep adjusting, especially when you're adjusting upwards. It feels nice. So the taxman is comfortable when you're adjusting upwards. Now, so up to June 30th, the moment you have filed that return on June 30th, then that's the end of provisional filing. That beyond June 30th, you cannot amend. Like now, I'm emphasizing this because this is the month for the deadline.
Yes.
That if you have filed, if say you filed in December, and you forget to file by 30th June, then you cannot change. What's the implication? That the return that we are about to file on 30th, by 30th June, it should be 90% close to what we call the final return. Now, the final return is what looks at the exact results from your operations. But the provisional return is an estimate. I want, again, our viewers to differentiate between the two. A provisional return is an estimate. A final return is an accurate record from the operations of your business. Now, if you have filed your provisional return by 30th June, and it is not 90% close to the final one, the exact one, then there is also a penalty for under declaration. Yes. The law says estimate. But as you estimate, because you see, by 30th June, the year is ending.
Yes.
Your estimate should be relatively correct or accurate. That's why they are leaving a balance of 10%. That your estimate should be 90% close to the final return. Short of that, if it is, let's say, 80%, then there is a penalty.
Isn't that unfair?
I wouldn't want to think that is unfair. Because look, you have the 12 months to look at whatever you have done in a period and now estimate, but estimate accurately. The variance, or the degree of variance that is left is that 10%.
Yes.
That because there are adjustments that you haven't made here and there, so you may not estimate 100%. So that's why it should be 90% close. Now, if you are meant to file by December, as I said, the first provisional return, and you have not filed, what's the implication?
You're supposed to file
by December
31st.
But for you have not filed. Now penalties come in. That every month that you are late, now it is from Jan to June. Those are 6 months.
Yes.
That if you file in June, when you didn't file in December, every month the penalty is 200,000. Yes. That
it's like an
the moment it crosses into Jan, if you file on 2nd Jan, that is 200,000
for late
filing. If you file in Feb first, that is 400 for late filing. Until June, that is a maximum of 1.2 million for late filing. That is if you file in June. Now, in case you don't file, it is you see why again the penalties are there. I had said you want to direct behavior. Otherwise, people will just do whatever they want. And this final return that I talked about, because I said after June, you get into now the period for filing what you call a final return. The law gives us 6 months, that from July to December 31st, after the end of the financial year. Those are 6 months.
Yes.
You need to prepare whatever you are preparing, then file what we call a final return. So it is on the final return where the system will check and say, are you 90% close or not? So if December, now the deadline again goes to 31st December. In case you don't file and get into another year, every other month that you are late, penalty is 200. Even if they are 50 months, the system will compute for you 50 months times 200. And that will be a penalty liability. And the penalty is part of income tax that the government demand from people.
Okay.
Until maybe if there are waivers, we have had a number of waivers, but it's not a given. It is until the government has said, no, let's waive off. But if not a waiver, then it is also a tax liability that you are meant to pay. Now, when you look at, for example, VAT, value added tax, pay as you earn, withholding tax, and excise duty, all of those tax heads, the due date for filing is within 15 days after the end of the month. I want to break it down.
Yes.
That we are in June.
Yes.
So, VAT, pay as you earn, excise duty, and which other one? That relate to the month of May. We have from 1st June up to 15th of June to file.
So meaning we have about 2 days for this to end.
Exactly. If you are looking at returns for May, if you haven't filed, then you have today is
11th.
11th. So those are 4 days.
Yeah,
4 days to hit the deadline. And as I said, file and pay. It means the due date for filing VAT, pay as you earn, excise duty, and in case I have forgotten, is 15th of every month. And that's the same due date for paying the tax. So all of us, by 15th, we should have filed our returns, but also should have paid. In case, specifically, this applies to VAT and these other monthly filings, that in case you fail to file your return, VAT, when you file later, there is also a penalty of 200. Now for it is not per month, because you see VAT is for only 1 month. So if you have not filed and you file 2 months later, the penalty will only be
200,000.
200,000. It is not like income tax, because income tax is annual, so that they look at per month. But for VAT is only 1 month, so the 200 rates to only
1 month.
Yes, so it is not about all through. Now, the other important point, as we talk about filing,
yes,
because remember the discussion is about tax compliance. So if you have to look at tax compliance, you look at filing accurate and complete returns. That is also very key. Because I said one of the obligations is filing. It is not just a matter of filing whatever you want. No, filing accurate and complete returns. Because remember, when we file these returns, URA does what we call return verification. So it's not that whatever rubbish we send will be accepted. It can't happen. It can't happen. So you see it. We run a tax system called self-assessment, that when we are filing, URA will not come to you and say, put this here. No. It is self-assessment. You sit with your accountant or whoever, then you do the filing. After doing the filing, URA will go through to check and say, hey, is this right? Is this right? If it is okay, it will be approved. If it is not okay, if they have more information, then URA will now raise their own assessment. You have put in your assessment through a declaration. If URI finds the reasons why this assessment is not correct, then URI will raise their own assessment. When you hear people saying, I have assessments, it is because, one, they have failed on their part, they are not compliant. So the taxman is coming in to now do their part. Since you are unable to do the accurate thing, may I have this information? So you have more taxes to pay through an assessment. Importantly, it's not that all of these assessments that URA raise are actually correct. Sometimes they also put in some estimation because possibly there is some information that you have that they don't have. But what I can tell our people is that if you are there again struggling with assessments, that's why we are in the business. That's why we serve people. We represent them. We handle these assessments because the information that you have, as long as it can be shared, then it is us to arrange it. Take it to you and say, whereas you assessed Mr. Mukalazi 100 million. No. It should actually be 2 million. It takes us back to record keeping. As long as you are giving me enough paperwork, enough documents, then I will say, this is the supporting document. This is how much this money made. This is his bank statement. You check. If you have any other information, possibly you can use it. And you find an assessment that was 100 million, we bring it down to 2 million. But we cannot do this when you don't have records. So I would be doing a service to our listeners if I can only talk about tax compliance and then I don't talk about bookkeeping, because they move hand in hand. But what comes first is bookkeeping. Yes.
So as you think about opening, even what you spend before you start should be also recorded.
As long as it is a business expense, then it must be recorded. But if possibly you have donated and you don't want to claim it anywhere, then there is no need of recording it. Now, the other bit of compliance that I must talk about is again to deal with directors, as I had mentioned at the start. Now, you realize that where we are today, if you are in any serious business, every other day they're asking a tax clearance for businesses. When they ask a tax clearance, if I apply to URA and I'm asking for a tax clearance for demo consult, URA will check how compliant a demo consult is, but also will go ahead to check how compliant me as a director, how compliant am I. As the company is filing returns, even me as a director, I'm meant to file my returns because I'm a taxpayer. Because being at a demo consult doesn't stop me from earning more money from some other sources. So, whereas I'm on payroll at demo consult, all of these other sources, I should also bring them together in what we call a director's return. Now, we have found challenges where directors focus on compliance of the company and forget about director's returns. Now, along the way, you find URA is saying, but you man, for 5 years you have never filed a return. Someone is like, but I always file every year. Yet, this person is only focusing on filing for the company and not filing for the individual. So that is also a very, very key point to note. That there is one who asked me at one point, was like, but if I've already taken money, why should I go into filing returns? But remember, the only way you can benefit from money paid out is when it can reduce your expense. If this money cannot reduce your expense, then just know it is not helping you. As a business, you have incurred. So if I pay money and I cannot claim it, then before URA, actually this money I paid is my profit. I want to simplify it so that people understand it. If I pay you 10 million as a salary, but I have not declared it through pay as you earn, then on the side of the taxman, he will not accept this expense. So if he has not accepted this expense, what we call disallowing an expense, if he has disallowed this expense, then in effect, he is going to charge me 30% of that expense. In effect, that me who paid you 10 million, I'm also being charged 3 million on top of what I paid you. Yet, say pay as you earn is a tax on you that I would have deducted it from the 10. But because me, I don't want to declare it, I have already paid you the 10 you have gone, then the taxman will also disavow my expense, and that way the taxman will charge me 30% of the 10 million. That is 3 million. In effect, I've incurred 13 million when I would have incurred less.
Well, as we wind up, I see our time is moving. Of course, we shall get some more time and exhaust and perhaps talk about more more on tax compliance. But what are your closing remarks, especially about what we've just shared, the bit we've just shared about tax compliance? Because I know we've not exhausted everything, but at least the bit we've talked about.
Yeah, I see time is fast spent. What I can say, Uganda as an economy, we have evolved, we have developed. URA has gone through stages, has advanced, and especially use of technology. We no longer have a chance of hiding from the taxman. What I appeal to our people down there is that let us all get interested in tax discussion. Let us have tax experts around us. Time is gone when tax people were not known in the market. But the way URA is pressing us, I'm sure our people have received what we call agency notices. The bank accounts have been frozen. Offices have been closed because of not being compliant. So to avoid this one, if you have the capacity, hire a tax expert, hire a tax consultant to advise you. Because it is, I talked of 30% that they charge on the profits, but also 15% that they charge on you when you are taking your dividend. What's the implication? That tax takes over 45% of your profit, you as someone who woke up and went into business. That is not a small expense to ignore. It is actually the biggest cost that we have in business. So, as I conclude, that takes us into what we call tax planning, that has become inevitable today, that you cannot survive in business sustainably when you are not doing tax planning, which is all about organizing your tax affairs so that you are managing your tax very well, so that you don't close your shop or your office because you have failed to comply. Thank you.
Thank you so much, Mr. Dedan. We really appreciate what you've just shared with us, especially about this was an awakening call to us. Now that we are in the last month of filing, it was a wake-up call to us, and I think we shall look at in depth of what happens if you do not comply on time. Of course, we've talked about a few penalties and this, but also the advantages that come by the compliance. Now, of course, we cannot go beyond this today. We appreciate you for having started with us and having watched through up to now. Edrine Mukalazi is my name. I've worked with Jonah, Jal, Didmas in transmission. From the entire team, we wish you a blessed night. See you again tomorrow.